appear live on YouTube as well as across X. But give me just a moment. I'm going to make sure this is broadcasting. All right, looks like we're going here. Welcome to the live trading session. My name is Ross Givens. It is January the 26th, 2026, and we got both a busy week as well as a lot of news going on. So we're going to try to break all this down, show you where we're focusing, and really outline what I believe are the three major opportunities in the stock market for the first half of 2026. And I spend a lot of time talking about the theme of the market, showing that you want to focus on areas where money is flowing, right? And so whether that's the dot-com bubble of the 90s, the AI bubble of the last couple of years, when all the big players are investing in a certain area, they're going to drive those certain areas higher, right? And so instead of doing what most people do, which is trying to find the needle in the haystack, this little $2 stock no one's heard of that turns into the next eBay or Microsoft, instead, you just figure out where it's raining and put your bucket there, right? You go see which areas are rising, where money's flowing, focus there, and I can just about guarantee you'll see better results. Okay, so this is the copper market. I talked about this a little bit last week. We'll break this down in more depth today as well. But the big areas I'm seeing, and by the way, we are in a rip-roaring bull market. Over the weekend, this is the S&P 500. Over the weekend, we got news that Trump is considering 100% tariffs on Canada if they agreed to an open trade deal with China, because he's essentially saying, y'all are just going to backdoor us. China's going to send everything there. You're going to bring it in here, and they'll avoid the tariffs. And so, as usual, their governor backed down on this, and you see the market is not even being affected by it. In fact, the market is up. The pre-market price is higher than Friday's close, so everything's strong there. In addition, the silver and gold markets continue to surge. More specifically, silver. Silver is gone in a month, folks. In 1 month, the global silver market is up 49%. I don't know that silver's ever gone up 49% in a month, at least not since the 1970s. So anyway, silver, these trades have been pressing on, are still doing well. Gold still continuing to push higher. And the big thing we're seeing in 2026 is a rotation away from the big winners of 2025 and into, like I said, the big three opportunities. So the way these booms work, and I'm specifically talking about AI, is a new hot development comes out, the internet, AI, one of these big once-in-a-generation things. And first comes the boom phase of the stocks, right? The stocks move before the companies. So everybody gets all excited, pumps the stocks way up in value, pricing in perfection at 2, 3, 4, 500 times earnings. Some of them don't even have. They're not even profitable, and they're worth hundreds of billions of dollars. And typically, once those valuations get too insane, and everybody starts going, wait a minute, are we overpricing this? Then the money kind of rotates out and goes to safer areas. And so if you look at gold booming, you look at silver booming, you look at the S&P 500 near all-time highs, none of that is the case with NVIDIA. NVIDIA's gone absolutely nowhere for 6 months. It cannot find a higher price. Now, will NVIDIA be higher 3, 5, 10 years from now? Yeah, probably, possibly. But it's not leading the market anymore. And if you're out there trying to make money in 2026 on 2024 stocks, you're going to have a heck of a time. So what are the big opportunities? Well, in my opinion, there are three big themes of the market for 2026. Number one is energy. And yes, this is in a large way fueled by the massive CapEx in the AI space. The current AI data farms are currently using 5% of all U.S. electricity. That's crazy. Crazier is by 2030, that's going to be 10, 15%. It's huge. And so they're creating so much demand for energy so fast that the supply cannot catch up. That's why prices are surging in unregulated states like California and some of the others of the Northeast. So energy going to be a big theme. Now, this does not just mean go buy crude oil. if we have to expand energy in a massive way, it's going to happen through more non-traditional sources. So nuclear, I think, is powering up for another run in 2026. We're seeing some solar stocks do very, very well, midstream companies, but energy, a big, big theme. And I'll show you why here in just a second, okay? The second big theme of the market is metals. Now, when I say metals, yes, obviously I'm talking about gold and silver, but also aluminum, also steel, also copper, also rare earth minerals. The metal space has been overlooked for so long, people are finally coming to the realization, oh, wait, we can't do any of this stuff without a whole bunch of steel, without a whole bunch of copper, without a whole bunch of silver in these applications, okay? And you couple this with the fact that the U.S. dollar is declining in value at a rapid rate. We have proven to the world last year with Elon Musk and the Doge team and Trump, we've proven to the world we'll never cut our spending. We'll never live within our means. We'll never stop printing trillions of dollars a year. And when you do that, when you say it's never going to stop, the deficit is $2 trillion. Think about this for a second. Between what the government brings in and what the government spends every single year is $2 trillion. That's under a Republican. That's under people who don't want waste, fraud, and abuse. And that's in one of the strongest economies we've had in years. With 4.5% GDP. Imagine how big that deficit's going to be when the economy's weak. Okay? So that's number two. And what that means is they're going to print. That's going to continue to devalue the dollars. It's going to take more US dollars to buy stuff. That's why gold, that's why silver, that's why these things are rising in value. They're not really rising in value. The dollar's losing. I guess they're kind of rising, but you see what I'm saying, okay? And so that's really number three, is the debasement trade. The dollar will continue to lose value. The global investor is fed up with fiat currencies. And I'm not saying we're going to stop using green dollar bills anytime soon. But people are waking up to the fact that this party has to end somehow, and it's going to end in a bad way. There's no appetite for U.S. bonds. That's why interest rates are creeping up on bonds while the Fed is cutting rates. How can that be? Well, simple. Nobody wants them. If I offered you a piece of paper and said, give me $1,000, I'll pay you 3% interest on it. You might say, that's not enough money for me. Say, all right, I'll shop it around. If nobody wants it, what do I have to say? All right, fine, I'll pay you 3.5. Fine, I'll pay you 4. Fine, I'll pay you 5%. That's what's happening. So when there's not demand for government bonds, instead of paying the full $1,000, I'll give you $950. I'll give you $920. So the yield, does that make sense to everybody? So despite what they'd like you to believe, the Federal Reserve does not control interest rates, at least not completely. They set the interbank lending rate, and the rest of it, the free market does. It's just that it's typically fallen in line with the Fed, but they're losing control. So these three things, I believe, are where you want to focus, at least right now. And I've done big videos showing my entire retirement portfolio. I've got 25% in energy, 25% in metals, 40 to broad-based stock indexes, and then 10 to just hard assets, farmland, commodities, stuff like that. And so far, it's outperforming the market because, again, that is just the theme of the market. So how do we prove that? Well, again, look at what's going up. Now, I'm going to set this up for all six, okay? And I'm going to tell you what this is. Don't worry. Nothing complicated about anything I'm going to share with you today. So this is our TA Industry Strength Indicator. Now, most of you probably have access to this if you're in here. If you're watching on YouTube or on X and you don't, if you'll go to tradewithross.com, you can get signed up for an entire year. We're running a $5 special. You get a year of these live mentoring sessions, access to this indicator, my newsletter, and a bunch of other stuff. So again, just go to tradewithross.com to sign up for that. No strings. Seriously, it's $5. And so what this does here is show us which areas of the markets are rising the most over the last 1, 2, 3, 6, 9, and 12-month periods. And the logic behind this is very simple. Whatever the Goldman Sachs's, the BlackRocks, the Warren Buffetts, the Ray Dalios, the multi-billion-dollar managers, whatever they're buying en masse steadily is going to go up faster than anything else, right? And so if you can see which areas are rising the most consistently, month after month after month, you know that's where you want to focus, right? So when we're looking here, and we've added a few industries in here, but a couple of areas are clear as day. Now, this scans 40 different subsectors, okay? This is just the top 7 over each of these periods. So anything in these lists is already in the top, 15% of performers. Rare earth minerals, rare earth minerals, rare earths, rare earths, rare earths. Clearly, where do you want to focus? Mining and metals, mining and metals. Now, I don't know why Jean did this, but we actually have a mining and metals group, which is everything. And then we also have gold miners, gold miners. So it's taking up 2 of the top 7 areas here, right? So lots and lots and lots of metals I'm circling here. Almost everything I'm circling is a metal. Lithium, right? Steel, mining and metals. I mean, lithium, steel. So these are the areas I'm focusing on. Now, is there going to be some little pharmaceutical stock that quadruples this quarter? Of course there will. Will there be some little retail stock that triples in the... Yeah, of course. Yeah, I'm sure there will. But why am I going to try to find the one when I can focus on areas where everything's going up? Instead of going, I'm going to try to find the one good one in the trash bin. I'm going to go, well, this is a primo rack. They're all great. Which one is the greatest? Does that make sense? Questions on this so far? And there's about a 20-second delay between when I talk and it shows up here on the YouTube chat. So my apologies if it takes me a second. I don't see your question immediately. All right, so we know where we want to focus, right? How do you split it in 2, Philip? You just add 2 of them. I just added the indicator once and put it on 1, 2, 3. And then I went straight back to indicators, TA, industry strength, added it again. See how there's 2 of them over here in the top left corner? And the second one has 6, 9, and 12. So I got one top right, one of them bottom right. Nothing to it. Wondering how an impending government shutdown will impact markets this week. Well, what we've seen historically, at least the last couple of years, these shutdowns don't really affect the market. I mean, we just had the longest government shutdown, I think, in history ever, wasn't it? Under the 30 days or 50 days, whatever it was. I mean, stocks may have come down 1 or 2%. Like it just, we know the game now. Okay, these guys want to spend on this. These guys want to spend on this. They whine, they bicker, they make a bunch of stupid Instagram clips, and we're so for the people. No, we're for the people. And then eventually, okay, and they settle on something. It opens back up, and all the government officials get back pay, and we know how it works, right? So, other than maybe some very, very short term stuff, it's not a big deal, in my opinion. So, the other things we have going on this week. The tariff threat, that thing's pretty much out of the way. There's now a 75 to 80% chance of government shutdown. Again, markets are opening higher, so clearly they don't care. Consumer confidence data coming out Tuesday. Now, the Fed meeting is Wednesday. That's going to be hugely important. We also have some big earnings this week. Microsoft, Meta, and Tesla, and Apple. And then the PPI, which is the producer something, what is it? Producer pricing index is the inflation report, right? An unofficial holiday for the government workers. Exactly. Now, if you live in paycheck to paycheck and suddenly you don't get one for a couple of weeks, that's gonna suck. I mean, that's not good. But if you're not, they're all getting back pay and they're gonna be made whole, so it doesn't really matter. How about Broadcom and Chipotle for long-term investments? I mean, sure, long-term, I think they're good. I'd love Chipotle, in fact. Where are we? We still coming off oh yeah. I talked about this one a while back. I love this stock. Obviously it looks terrible in a chart, but look at how fast it's coming off the lows, right? Was it performing well here? No, but it's finally starting to run. It's up 35% in 2.5 months. So, long term, the play is, buy low and sell high. Short term, mid-term, meaning anything you plan to hold for 2 to maybe 3 or 4 months, your plan is buy high and sell higher, okay? That's where you want to make money because you go, oh, look, it's cheap. Okay, Like, if you're going to hold for 10 years, that's true. But it was really cheap here. How'd that pan out? It was really cheap here, looking at past. But the big moves happen when it's new high, new high, new high, new high, new high. This is where I want to be. I just want to be there for the strong burst higher. So today I'm going to show you how to identify that. We've covered how to find the stocks, right? It's not overly complicated. What the heck's going up the most, right? I mean, it sounds stupid, but that's how it works. The market is an auction. It's just buyers and sellers. Whatever the most buyers are buying is going to go up. Whatever the most sellers are selling is going to go down. So, don't try to swim across the current. Against the current, excuse me. No, we don't have to do futures. That's fine. Yeah. I'm not going to do any futures either. The gold silver ratio has been around 50 for 2 weeks now. Should we sell some silver? So, yeah, I mean, I'm not selling my silver. But it is going to serve it's going to see a big correction sooner than later. Now, here's the thing. This stuff was $75 3 weeks ago, folks. Okay? So if it fell to 75, you go, oh my gosh, it's crashing. And it would be short term, but it would still be up. It could fall 32% in a day and still be up on the year. That is craziness, right? So this is just what happens. This is called a blow off top, where it starts rising and then it just sort of goes parabolic, right? And when this happens, typically the short sellers have given up. They're buying to cover. It's putting gasoline on the fire. The momentum traders are in. The future traders are in. Everybody, like everyone in this room, and your Uber driver and your doctor and your dentist. I get 10 texts a day. Ross, I heard it's time to buy silver. I'm like, I mean, I think it's going to be higher 5 years from now, but this is not the day I would buy, right? Because could it fall to here? Would that be in any way unreasonable? No, it's just taken back 3 days of trading. But that's going to be a 20% drop. So it's extended, right? Do I like it? Yes. Am I selling here? No. But this is one of the worst risk-reward places I could possibly buy. Does that make sense? I don't think the gold to silver ratio, I mean, look, if you're looking at monthly charts, you're trying to decide this is a good time to buy over the next 20 years. Yeah, look at the gold to silver ratio. But it's just a different economy. Silver is used so much in commercial and industrial applications. It's no longer just the baby sister precious metal that it was for the last, 3,000 years. So I don't think the ratio is near as important as it was. But anyway, I want to dive into what we're looking at, which is how to identify when to buy these stocks, right? So this is when I told everyone to buy silver, okay? I did a video, actually it was at 42 when I did this. It was right in here. But I told everybody you want to buy silver here. It's going to break out above 55 and run. Now, I look pretty smart now, but how did I know that was the time to buy? Well, it puts in a very repeatable pattern. And this is a pattern that looks as follows. This is typically what you see, and it's what you want to see, by the way. When stocks or commodities or whatever it is you're watching are running higher, you don't want them to do this. I mean, it's fun when you own it, but like I just told you, a reckoning is coming. It is going to correct and consolidate, because what you want to see is for an asset to rise, level out, rise, level out. This stair-stepping process is the sign of a healthy market, okay? You bought something for $10. It goes to $15, okay? Some people who bought at 10 want to sell. They want to take their profits. They need to get out of the way. You need to get out of the more selling pressure you have built up, the bigger the drop is going to be when it happens. So we have silver at $110 an ounce. We have some of you that bought at 10 and 20 and 30 and 50 and 80 and 90. All of us are up huge. None of us want to lose our profits. So if this stuff starts falling, at some point, you are going to sell. Don't say you won't. If it went to a nickel, at some point along the way, you might say, I got to get out. Something's happening. So we need to get those people out of the way. That's what these little consolidation periods are. It's time for the market to digest this move. The sellers need to get out of the way. The guys who are on 15-to-1 leverage need to be shaken out. And once those sellers are out of the way, we've absorbed that supply, that pent-up selling, the stock is then free to run higher. It goes to 20. Again, consolidates, tighten up, runs to 30, right? What's scary is the alternative when it does this, kind of consolidates and runs, and then it goes like that because it forgot to consolidate. It forgot to absorb the supply. So all these people going, I'm going to sell. As soon as I see any weakness, I'm going to sell. They're all going to hit at once. Okay. And so typically when we see these consolidation periods, that's where you want to buy because once it emerges, it's now set for another move higher. And if we go back big picture and look at this on like a weekly chart, it becomes very, very clear. Now, again, this parabolic move is just insanity. But look at how it typically moves, okay? You get a run higher, a consolidation, it absorbs, it tightens, it blasts higher. Now, this ended up being the end of that move. It kind of consolidated, never blasted higher. So for 24 years, this thing went nowhere until finally, big move, big multi-year consolidation, starts to break out, perfect consolidation in here. And then here was the breakout, and it just went parabolic. And this is a weekly chart. You go to a daily chart. It's like, okay, well, there's the breakout in a weekly. Here's the, right? It all kind of lines up. And when you go back and look at any big performer, take NVIDIA, for example, you'll see this pattern. So a stock, a commodity, a cryptocurrency, whatever it may be, has a big run. It needs to consolidate, absorb that supply, tighten up, run again. Tighten up, absorb that supply, run again. And when you go back historically and look at charts of NVIDIA or anything else, if you could only hold this stock for, say, 2 months at a time, where would you want to own it? Well, I'd want to get in here and out for this run, right? I'd want to get in here and go for this run. And these are the periods I'm going to show you how to identify. What we are doing is dating stocks. We're not marrying them. We're not trying to hold on to this stuff for decades at a time. I think my feed is frozen here. Let me see if I can fix it. Okay, never mind. It's working over here. So this is a pattern we're going to look for in that. It's going to look like this. We're going to look for a big move up. Then you want 2, 3, 4, 5 of these little shallowing consolidations. And then when it breaks through, you want to buy. Now, let's look at some of these. We'll go to the gold market, for example. This was an absolutely perfect one here in August. Well, I told everybody to buy. Another one setting up in here. But look at this pattern, okay? I'm just going to go back in time here. All right. Now, look how this happens. Big run, 2,600 to 3,500. Gold is a multi-trillion-dollar market. It's enormous. Runs up. Now, what you're going to look for, some kind of support like this, okay? So it's a big run up. There's going to be some selling taking place. You need the profit takers. You need them to sell. If you want to sell, you're weak, fine. Get out of the way. Consolidate this thing. Big guys are still buying, drive it back up. Get another wave of selling, although this one is smaller. So the first dip here, 11%. Next dip, only 5.5%. Why? Why is it half? Because there's half as many sellers. A lot of them got out of the way in the first run. Okay? Again, buyer's still there, pushes up, another little dip. Pushes up, another little dip. Pushes up, and then it finally breaks out here. That's where you buy. Because you've absorbed the supply. You've worked through the sellers. You have the same amount of stock or gold or crypto as you had before. Same amount of demand you have for it, excuse me. But there's fewer shares or ounces or whatever available to buy. You've got through those sellers. So it's being absorbed. It's moving from the weak hands to the strong hands. And this is crucially important. This is supply and demand. And it is what allows you to enter at a place where you have an actual edge. Let's pretend let's pretend an imaginary economy. There are $100 in this economy, and there are people that have made 100 widgets, right? This could be an ounce of gold. It could be a share of it. We're just going to call it a widget. Okay. In a market with $100, chasing 100 widgets, what are they going to sell for? One widget is probably going to sell for $1, right? It's just when it all evens out, when the buyers and sellers all kind of come to realization this is the market, that's what they're going to sell for. Now, what's happening in these consolidation periods is we're absorbing some of that. The big guys are buying and buying and buying and buying. And so they've bought up as much as they can here. So now we have a new $100 coming into the market of buyers. But now there's only 50 widgets left because half of them have been bought up and they're not being offered for sale. They're not freely trading. They're sitting in ETFs and retirement accounts and somebody's safe. And so what are they going to sell for now? Well, if you have the same amount of demand, still fresh $100 coming in, but there's only 50 widgets left, now they're going to sell for $2 each. Does this make sense? This is the idea of supply and demand. And it's just it's a free market. And so when you're absorbing all this supply, getting all these sellers out of the way, there's now fewer left available for sale. Okay? And so then, when this thing does break out, once it is absorbed and absorbed and absorbed and absorbed, then the little thing is now free to go higher. And it's not that there's suddenly massive demand that showed up in September of 2025. It's that the same amount of demand that's been there is now chasing a smaller pool of shares. Plenty of people were willing to sell at 32, 33, 3,400 an ounce because they all bought for 2,000, 2,500 an ounce. But once all those sellers are out of the way, once nobody else is willing to sell their gold at 33, 3,400, they got to go, all right, well, would you take 3,500, 36, 37, 38? That's what allows them to move fast, quick, and smoothly. What happens when the pattern is upside down? The stock is probably about to go lower. Yeah, absolutely. Give me one and I'll show you. Give me a name and we'll look at that. Will silver demand and manufacturing keep the price from big drops? I mean, it will keep a good amount of demand there, yes. But silver doesn't go up 50% in a month because industrial demand increased 50% in a month. This is speculation. Gold is going up as well, but not as fast. Why? Well, it's just a bigger market, right? I mean, what's the global gold market? Let's take a look. We'll see. Gold versus silver market cap. So the gold market is worth $35 trillion. Folks, the entire stock market's only worth 60 or 70. It's a massive, massive global market. Silver, after an historic run, is worth 6. 8 months ago, it was worth $2 trillion. So it's, a tenth. Now, I guess, a fifth the size. So it would just take 5 times more buyers to push it up, right? All right, other questions on this? And we're going to see if we can find some stocks to buy. Let's see how our 2 trades on Tuesdays are working out for us right now. I think we got one of them, I think, got stopped out last week. One of the Tuesday ones. One of them, however, is still rocking. FCX, okay, well, look at that. PDYN, Credo. No, I just put like 10 grand. It's not long. Okay, so we're up. Yeah, these are up pretty good. I mean, the LAC trade we put on, we bought right here at 588. Whoops, sorry, I know these charts look crazy. I'm not trying to give you a seizure here. We're up about 15, 16% on this. Now, this was not a perfect pattern, but can you see the overall pattern here? Like, see how it went up and then came in and shallowed and consolidated and absorbed out. So, all right, should be ready to go. So, about 15% or so. We haven't been in this one but maybe a week or two. BTU we bought. This is a coal stock, but the mining sector is booming. Currently up 17% on this. We bought it 18 days ago. Can you see the pattern here? So it's really, really clear. Perfect run up, big shallowing, coming in, tightening up beautifully. We bought right there, and we're currently up 17% in a couple of weeks. Now, are you going to retire on 17%? No, but we've done this in 2-3 weeks. And if you do that every 2 or 3 weeks, you're going to have a mountain of money. Pan American Silver. This is an easy one, right? Now, this was a pretty ugly look. The clean one was over here. That was probably the best one when it kind of came in and was tightening up. It was a perfect pattern? No, but we don't need a perfect pattern. We're in the strongest market there is right now. So we got this kind of shallowing in here. We bought Pan American Silver on a breakout. We're currently up, what, 19.5% in a week? I'm going to tighten this one up a little bit here. I feel like a correction is coming in silver. It's going to be, tell you what I'll do. Let me do this. I'll just sell I'll sell a little bit of this. Well, I will let it run a little bit longer. I'm just going to tighten this up in case it reverses. All right, so we mentioned the copper charts. Take a look at copper. Now, copper's a tough one. And the reason copper's tough is that it's heavy as hell. An ounce of silver, a coin, is $100. An ounce of gold is $5,000. An ounce of copper is worth, do the math, 30 cents. A pound of copper is $6, you can see. So if you're like, I'm going to stack copper, well, you better have an industrial warehouse, bro, because if you've got $12,000 worth of copper is 1 metric ton of the stuff. Now, it's not going to fit. It's not, but that's a lot of weight. I mean, your floorboards in your house would not handle it if you put your 401k in physical copper and held it. So the way to play this is either the futures market, which is levered up, risky, kind of tough, or the copper mining stocks. You buy that. You invest in the companies that are mining the stuff because they're going to make profits as the price rises. In fact, even more than the rise. So, yeah, copper looks, I mean, this was a shock event. This is much, like, you're not going to see this kind of move in gold or silver typically. You know, that's a 18% drop in a day. I'm not even sure what caused that, but let's just take that out of the equation. You can see here how after the big drop, see how it absorbed, see how it tightened up here along the highs, and then broke out. So we're in a nice little run here. Now, is this the prettiest chart to buy right now in copper? No. But if I zoom out, you know, and we're going to look at a weekly chart, we're going really, really big picture. Again, not a perfect chart. This is not like ideal perfect. The fundamental case to me for copper is strong, even stronger than the technical pattern. But you do see some kind of signs of consolidation up here. Again, went a little too high, shock move here. This was probably too early, too fast, came right back down, but it is coming out of a 5-year consolidation pattern. So I think copper is going to go much higher. In fact, I'm actually going to call my bank today. I'm going to take, I don't know how much money, but I'm going to buy some copper futures contracts and really try to press this thing for a longer term trade. When you step out, I mean, even further, let's go to like a monthly chart. Each candle's a month. So we're looking at, what, 30 years of copper data here? Again, not going to be perfect. Markets aren't perfect. But you want to see those signs of big, you know, consolidation, tightening up action, and then exploding out to the upside. When you put this in logarithmic scale, you can see we are just getting warmed up. You'll probably see copper north of $20 a pound before you realize it. And all these, again, that's crazy. It's not after we saw in silver. It's not. Okay, a lot of people asking to look at FLY. Let's take a look. Okay, FLY. Now, this is one of the stocks we did in the 2 trades. It did stop us out there. It just barely got us. When do we, let's see, we bought that like here. I think my stop was maybe too tight. Yeah, it looks a little weak. What I'm trying to do in FLY, again, Leading areas, right? Space, 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 space. It's a very hot area. Firefly Aerospace is, as you can tell, a space stock. Now, it's a young one. It IPO'd in August of last year. Very, very young. And the way to buy these IPOs, this one just immediately fell. Typically, what you see with an IPO is it comes out, goes, boom, a lot of success, and then gets absolutely murdered, and then finally forms a low and then starts its move higher. And so I'm trying to identify this point here. And so when I look at Firefly, I see big sell-off from 72 to 17 in record time. And again, this is not a perfect chart, but we're beginning to see those signs of that big shallowing consolidation in here. So I think I bought here. This could be the start of the move. It's rolled over a bit. And this is just a very volatile stock. Like, you know, we bought it's down 12%. It's more than I want to risk. Hold on, there's something showing up here. Be pain. No, it's not. How do I get rid of that thing? Sorry, guys. All right, I'll do this later. This little arrow's up here driving me nuts, just trying to get him out of the way. But look at the ADR. Can you see that number in the top right corner? You probably can't. It's very small. This right here, it stands for average daily range. That's how much this stock moves from high to low on a given day on average. 11% in a day. The average day is an 11% move. NVIDIA is a monster, and its ADR is going to be a fraction of that. What is it? 2%, right? This is a very, very volatile stock. So we're going to see what happens with it. It's just a little wild. I probably shouldn't have taken it. I just thought, man, if it breaks out here, we catch it right. I mean, it could have run to 50 in a real quick way. So it doesn't look bad yet. It's just, you know, it might not be ready. So $26 is really your danger zone. See how this is where the selling is stopped for the last couple of weeks. If it blows through 26, it's probably not ready and it's going to continue lower. What about UFO instead of fly? Well, UFO is a space ETF. Yeah. It's all the stocks. And so it's kind of a tight consolidation here. Typically, the consolidations are either going to be flat consolidations. It's going to go up and just go stay flat for a while and then run. Or my preference is a shallowing consolidation. That's when I know we really have a power move coming. So you can see here in UFO, I mean, it made this big, so it had both here, right? Run up, you know, flat consolidation for a couple of weeks, run. Then we have this much larger shallowing pattern here on UFO. So it doesn't look bad. Again, none of this looks bad. I'm not saying it's going to go down. I'm saying I want the lowest possible risk entry. I want to buy right here, right there for the explosive period. I want to risk 7, 8, 10% and make 30, 40, 50. If I buy here, where am I wrong? It very well could go up. But I just am a total chicken. I don't take a lot of risk in my money. And so I want to get in where I have the best chance of a big and fast move. And then I'm going to, like I said, date that stock, move on to the next one. What do you think will take the S&P 500 to move? And do you think small and mid caps do better than the S&P 500? Good question. Hard to say. I haven't done a lot of deep dive on the, I mean, if you look at, there's the S&P 500. If you look at the Russell, let's compare the two. This is the small cap index. The small caps are kind of outperforming right now. It's the blue line. And this makes sense. What's the big weapon the government's using, that Trump's using right now? Trade tariffs, right? Tariffs are the weapon. Tariffs are the oh no, what did I do? Yeah, geez, I deleted everything. Let's see if I can go back. There we go. Tariffs are the weapon of choice. That's what's causing all the volatility. Okay, great. We do a ton of business with Canada. Oh no, they might slap 100% tariff and ruin it all. Let's sell off anything with exposure to Canada. Or manufacturing is going great. Oh no, Trump's putting tariffs on China. Well, that's going to screw the whole thing up. Sell off anything with exposure to China. What country does not have risk of tariffs? The United States, right? We don't tariff stuff made in the U.S. So what size companies tend to sell stuff in the U.S. versus international? The smaller ones. Smaller companies like mine and probably some of yours sell most of their stuff to other Americans in the country. You're not selling a bunch of product to India and Taiwan. If you're Intel, if you're the $4 trillion giant NVIDIA or Nike or Amazon, you sell all over the world. And so big tariffs on any one of these big trading partners are going to have big impacts on your profits. So people looking for safety go, all right, I don't want to take those risks. Trump's a curveball. I don't like this crap. I'm just going to buy smaller American companies who do most of their sales in America, right? What does the LOD distribution in the top right mean? I don't like it. It means low of day distribution. So it kind of goes, all right, the average move, like, let's go to a big one, for example, Fly. The average move is 11.2%. So currently it is 26% above, 25% above that low of the day. The guy who made this indicator put that there. I don't really use that part, but to just give you an idea. Options on USAR are flying. I bet they are, my man. Good for you. Oh, Mark, what's up, dude? I appreciate your comments on YouTube all the time, by the way. I do. You just left one the other day. I appreciate it, man. Yeah, you're making a fortune on these calls. Good for you, dude. USAR up 20% today. In the news, I think I just saw it before I sat down here, was that the government is offering what? Money for 10% stake. Is this the company they're buying? Let me see. No, they already did this, right? This is the one they bought a while back. Excited about this transaction because it accelerates the speed at which we can reach commercial scale. Gross break even in 27. Okay, so this must be moving just on fundamentals with the company. But yeah, this is the one that Trump took a 10% stake in over in here. Now, look at the size of the pattern in this one. Can you guys see it? I've already drawn it on the chart. How pretty was that? And you might go, well, yeah, Ross, that looks stupid. It went up and it came right back down. Yeah, I know. I don't care. Like, I'm buying here. If you're up 129% in 12 days and you let that turn into a loss, we need to have another conversation. And that is the when to sell conversation. Now, am I saying I would have sold right here? Not a chance in hell. Unless that was just pure luck. I had no idea that was the top. But you get in, boom, I'm selling some here. I'm selling some here. And I'm stopped out on the rest in here. So I'm up 50% in 5 days. I'm selling half. I'm up 100% in 2 weeks. I'm selling more. And the little piece I get out of and the rest, fine. So I probably would have netted, 70% on this. But rare earths are booming. This is a rare earth stock. You follow the pattern. Now, did you, Mark, I'm hoping you're going to tell me you bought this thing on the 16th. Tell me what day you bought this thing, Mark. Now, Mark knows what he's doing. Okay, if you guys are new, don't worry. We'll get you there. But here's where I'm hoping Mark bought. I'm hoping Mark saw this thing come way down, saw the shallowing consolidation pattern up to lows we look for, and then bought, in his case, options right here as it began to break out. Come on, Mark, make me proud. What day did you buy this thing? We'll find out. He'll type it in here in a minute. But you see how that would have been a great time to buy. Now, this was big overnight news. We can't expect this to happen. But even without that news, you were up 27% the first couple of days as it broke through. Mark says he bought Friday. Oh, you bought here. Okay. You just got into the acceleration. All right. So you're still up very, very big. If you got up here, you'd be up twice as big. Because when the stock goes up 50% in 4 days, depending on what option you bought, you're going to be up 400 or 500%. How much are you devoting to swing trades? Great question. So I've got the core of my portfolio is in a retirement account, right? I mean, I feel like I'm pretty good at what I do, but I don't fully trust myself to the level that I'm going to risk the entire net worth, my family's retirement, but a pretty good chunk. I'm going to keep probably half to this, and the other half's in that retirement allocation I talk about with you guys. And if you haven't seen it, I've got a video on YouTube laying the whole thing out. By the way, if you're watching this for the first time and you're not a member, we do still have that $5 YouTube special going on if you just go to tradewithross.com. It's $5 for the whole year. Live weekly sessions with me, another live weekly session with my analyst on Thursdays, newsletter, indicators, picks, tons of stuff. But this is that portfolio. So as you can see, this is much more conservative. But it's 40% of the boring stuff, the Vanguard S&P, the value fund, emerging markets, et cetera. 25% of the energy, and I got that split between renewables like nuclear, solar, and then, traditional stuff, midstream, natural gas, the broad energy fund. And look, VDE, that owns Exxon, it owns BP, it owns Shell, and all the big oil companies. I have 25% to metals, both directly in gold, silver, palladium, and the miners, and then another half to the industrial stuff, copper, lithium, steel, right? And then a little bit into infrastructure and farmland and soft commodities. This is what I believe is the way to do it now. Now, how this would have performed in 2023? It would have not beaten the market because you wanted to own NVIDIA and the S&P 500 big index funds. But now all those AI stocks have reached massive valuations. The market is kind of stalling. It's near all-time highs. It's in no way a bad market. But just buying the big, mega cap names is not the leading formula today. And for the reasons we covered earlier. What's good stop loss for ALMS? Oh yeah, this has been a monster. This is a stock about on the insider side. I mean, if you haven't already, I would be out of 2/3 of this thing. We're up 353% in 73 days. If you haven't sold it all, then I'd give it some room on the stop, or I'd tighten it up on the stop loss. Right? I don't want to give away this big gain. So if I haven't sold it all, I'd probably have a stop in here at like 21, 22 bucks. If you have sold the bulk of it, give it some room, right? If you're out of 90% of this thing, you only got 10% left. You're just dealing with house money. Like, put it down here at 18 or 15 and just see if this thing turns into one that goes to 200. But don't give too much away. Up 33%, but you bought DIM calls. DIM. No, it must be something else. Oh, deep in the money. Okay, sorry. You went long 618, and you're up 187%. On which stock is that, RCP? You bought USAR at 16.5 each time, sitting on a 19 profit. Yeah, I mean, you're doing great. Now, notice how the market's reacting. Okay, let's go to a 1-minute chart. Notice the reaction. So this was Friday's close, 24.5 bucks. This is today's open, 30 bucks. Huge. Now, again, your job as a trader is not to, there is some big picture stuff, but you're not trying to outsmart everybody. You're not trying to guess what the earnings are going to be or have some great intuition that no one else sees. Your job is really, as a trader, not an investor, as a trader, your job is just to interpret. It's okay. What is consolidating? What are they buying? Where's the money flowing? Because that's what's going to move stocks. Long term, yes, Buffett's right. They will reach value. If they don't have earnings, they don't have sales growth, eventually they're going to come down and vice versa. What did Graham say? In the short term, the market is a popularity contest. In the long term, it's a weighing scale. In the short term, it's a popularity contest, something like that. I'm just playing the popularity contest. But look at the interpretation. So it gets up big. So your stock opens up 25% higher. Okay. If the news that took this stock up 25% over the weekend is big, game-changing, moving news, what are you going to do? You're going to keep buying. The stock's going to keep going up. If, however, the stock is up big on something that's not a game changer, it didn't increase the company's value by, $1 billion. What are you going to do? You're going to take profits. You're going to say, all right, that's a big move. Probably not worth it. I'm going to sell and take profits. And so that's why the interpretation comes in. So far today, they've been selling. Now, again, we're only, 19 minutes into the market. This could turn around. But it's not some major catalyst that's going to send this thing to the moon, at least not in the short term. So would I want to buy this thing here? No, I'd probably be taking some profits on the move. Not saying I'd sell it all, but, Mark's in here. He's up a couple 100% on this thing in a day. I guarantee you he sold half that crap this morning. All right. Let's see what else was there. Can you explain stock splits and how to read the chart after this, like KITT? Okay. Okay, so the split was here. Split was a 1 to 9 split. Okay, so stock splits work like this. You have, make this easy. You have 10 shares that are worth, wait, the easy math, $6 each. Okay? They do a 2 to 1 split. All that happens is the next day, your 10 shares turned into 5 shares, and the share price jumped from $6 to $12. The value of the company has not changed. The value of your investment has not changed. 10 times 6 is 60, 5 times 12 is 60. You still have $60 worth of stock, but you have fewer shares and they're worth more. So you go, why would they do this? Well, there are listing requirements. So for the NASDAQ and these other exchanges, it says the stock has to be above a certain price. That's why you're not going to see an S&P 500 stock try to get 50 cents a share. So they will split it to drive the share price up. Okay, we had 1 million shares, now you have 100,000. But instead of being worth $1 a piece, they're worth $10 a piece. It just looks more healthy. Now, this here, the stock chart is going to automatically adjust for splits. So it's not as if the split pushed the stock down. This thing was falling anyway. The split went into effect. This is all like counted for. So it was a 6 to 1 split, so, or 1 to 9. So this thing was probably like 90 cents at the time. But the price chart automatically updates for that. So you don't need to really worry about it. The only change you're going to see is in the number of shares in your account. Now, would I buy this stock? Not a chance in hell. And somebody asks, well, what if the thing is upside down? Well, let's look here, okay? Let's just go back in time. Now, if you look over here on the right side, I'm going to right-click this, take it a log scale, and I'm going to hit invert scale. It's going to flip this chart upside down, okay? Now, when I do that, let's go back to log scale. What do you see? If this is what the chart looked like, and I saw this thing made a monstrous move, shallowed up, tightened beautifully. This is an absolutely textbook breakout trade. I want to get in right there. Now, is this what happened? No, the chart's upside down. So when I flip the thing over, how it was, this is the exact same pattern in reverse. So this is when I want to short the thing, sell it. It's going lower. And that is, pretty much exactly what happened. It kept going lower. So be cautious of this, right? If you flip, it's a great exercise. Flip the chart upside down. If it looks good, you have a big problem on your hands. If we get into a bear market, everything's going lower, and you're looking for stocks to short, flip your charts upside down. Just sell short the breakouts. Nitro, I didn't see all your comments, but you said, long story short, QE is still alive. You're exactly right. Yes. The Fed is printing again, $50 to $80 billion a month. President Trump took a bunch of tariff money and what do? Buy a bunch of those mortgage bonds to try to bring interest rates down. They're doing everything they can. I'm not faulting anyone in the government. All the problems we have are from politicians that have done this for the last 70 years. Dems, Republicans, all of them. They're all terrible, terrible, terrible financial people. And it's an unsolvable problem at this point, right? Either raise taxes at 90%, which everybody leaves. You cut off all the benefits and everybody, riots. There's no fixing. It's $38 trillion in debt. It's a big problem. They're not going to ever fix it, ever. They can either default on the debt and every bank and institution that holds bonds goes under and the whole financial system collapses overnight. Or they print to fill the gaps and keep paying the bills, and that devalues the dollar and gold and silver and everything else, and the cost of living continues to rise. I'm not making judgments on this. They didn't consult me on financial policy. This is just the reality of it. And yes, Trump's doing what he can. He's buying up these bonds, try to get interest rates down and make housing more affordable. The Federal Reserve pumping money so the system doesn't break, and they're printing it up. I don't like any of it. They're doing what they think is best. I disagree with them, but, we don't set the rules of the game. were dropped on the board. These are the rules. Play that game. If you don't want to play that game, don't trade stocks. Fine. Go. I mean, you can do real estate. There's lots of ways to do this. But these are the rules of the game. And you're wasting your energy trying to fight against them. Say we shouldn't be doing that. And you get all hot and bothered. Like, yeah, fine, okay, but they are, and we're not in control. So this is what we have. Is the S&P 500 a breakout pattern? Will it break consolidation? Will it break out? I mean, yes, I do believe it is. This is kind of a skewed chart because what we had going on March and April. So I got to put it in log scale here. But yeah, I mean, it's not perfect, but you're seeing that action. Nice tightening. It's a little shake out here and right back, right? That's a really strong sign. You get a sell off, the market comes right back. So yeah. And if you go back through time, you'll see this pop up, right? You'll see this is the 2022 bear market. When was the time to buy that? Well, once it consolidated and absorbed that supply. Right? It's tougher with the index because there's so much going into this. You got 500 companies and their earnings and their news. You've got political stuff and geopolitics and everything else. Like, the reason this works so well with gold and silver and copper and Bitcoin and the commodities is there's no CEO of Bitcoin. There's no tariff on gold. They're operating purely on supply and demand. You don't have earnings reports and all these other variables. So it's the pattern I'm teaching you is a function of supply and demand. That's why it's so clean. With gold, you got a $35 trillion market operating on nothing but supply and demand. I've been telling you guys for a month it's a good time to buy gold. Why? Well, it's just really basic. I mean, this is the pattern you want to see. Some will call it a wedge pattern, right? An ascending triangle. Like, there's lots of ways to put this. You can call it whatever you want. I'm not trying to take credit for creating this, but it's that's the absorption of supply. And you see it over. I mean, look here. Look at it in September. Big run up, shallowing. See that kind of flat, absorbing that supply, breaks out higher. Let's go to log scale. You can see it clearer. Same thing in here. Comes in, shallows up, breaks out. I mean, it happens over and over. And gold was so obvious. Gold was so obvious over here. And I want to show you this, okay? And you guys, you've seen this so many times, you're like, Ross, we know. But the people who haven't, you need to understand this. So if you look at a daily chart over here in early 2024, you can see that consolidation, right? You see up, not perfect, but same kind of shallowing out, breakout pattern right in there, okay? Now, if you step out on a weekly chart, whoops, why did I make that red? But on a weekly chart and look at the last 5 years, what do you see? Well, pretty similar action. Big run up in 19 and 20, coming in, not shallowing, still, but boom, now it comes in, starts tightening up, getting ready to break out here at 2000. Step out to a monthly chart. Let's look at the last couple of decades. What do you see? Big run up, big multi-decade consolidation, breaking out here at 2000. So it's setting up in all time frames. And so that's why we got this big move over the last 18, 20 months. Setting up on the monthly, it was setting up on the weekly, it was setting up on the daily, like everything said we go higher, and we have. And then along the way, it is a run, consolidates, tightens, makes a run, consolidates, tightens, makes a run. So, right? I mean, it's this. I'm not reinventing the wheel here, folks. Is anybody having an enlightening moment? Anybody here for the first time? This is finally making sense to you. Thoughts on Starlink, in or out? Starlink's, isn't that owned by Tesla? Not a publicly traded company, is it? No. If you mean the service, I've tried it. It's not very fast. It's good for checking email and looking at cat pictures, but like I can't broadcast over. I can't use it for what I use it for. Because at least Trump knows business, unlike politicians. Yeah, I'm not knocking the guy. Like I agree with most of what he does. Maybe not the manner he does it in, but I mean, I'm not knocking him. If they put me in, I couldn't solve it either. If they put me in charge, you know what? I'd become the most hated man in the world because I'd rip the Band-Aid off. I'd default on the debt so my grandkids aren't screwed. And that's going to screw everybody here, but it's like, it's how Ponzi schemes work. Somebody gets screwed. The only question is who. Anyone in here receiving or about to receive Social Security, absolutely you deserve it. You paid your money in, you should get it out. The problem is they've already spent your money. It was a Ponzi scheme from the first day. All the money you paid in is not sitting in some magical account waiting for you. They spent it. And so now the next generation, we have to pay our taxes. They can pay people who paid before. And then when I become ready, they're going to go, well, Ross, we don't have your money either. We need another batch. That's why the declining birth rate hurts. It's a Ponzi scheme. And it works as long as the next generation is larger than the previous, right? And the boomers were so many of you guys. And when you were all working and paying all this money, there's no problem paying this stuff. But there were so many of you, so much excess cash, they didn't save it. And so now the birth rate's declining. The generations are shrinking. They're less productive on top of that because we've created a welfare state. So there's no easy solution to it. That's right, Morales, on the splitting, that's correct. Do you recommend buying real gold? If so, how much your portfolio would be in gold? So, yes, I mean, I have both physical gold as well as GLD. I don't think, like, if GLD is the ETF. You can buy that in 10 seconds from any brokerage account. It's backed by real physical gold. Now, some people say if you don't hold it, you don't own it, right? And so if we get a true Nixon-esque, we're confiscating all the gold, like real situation, you're going to have problems. I'm hoping we'll realize when it starts getting that crazy. But I do both. There's no right or wrong. This is just easier. I mean, I'm buying gold from APMEX. I get the stuff like a month later, and then if you want to sell it, you take a hit because you pay a premium. Right? You got to pay above spot price. So they got to refine the stuff. They got to make it into a coin or a bar or whatever. They got to ship it and market it and all that. When you sell it, nobody's going to pay you more than spot. So so it's not if you're gonna trade it, like you're gonna buy it and sell it within even a couple years. Physical makes that very tough. It's much more expensive. What about CoreWeave partnering with NVIDIA? Yeah, I mean, it's very good, but like, here's what's tough, okay? Oh man, I lost my indicator. Hold on. CoreWeave at the moment is worth $51 billion. See that bottom right market cap? Okay. Their profits are non-existent. As of the last quarter, they lose 8 cents a share. They're expected to lose 50 cents a share. So they're doing, let's see, this is quarterly, so call it $5 billion a year in sales. And this is how earnings multiples work. It's what makes it really tough today. Sales annually, $5 billion. Not profits, sales, dollars in the door. Okay. On that, their profit, and this is just as of like now, this year. I'm not saying it's going to be this way forever. Their profit, they're losing, call it what, 50 cents? It's, oh my God, 1%, 0.5%. They're losing about $2 billion. Okay. Every year. And the company value, what it costs you to buy it, the value of the company, meaning the share price times the number of shares, is currently $52 billion. Okay? Now, forget the billion, make this 1,000. Make it million, all right? You're looking at a business. You're looking at a restaurant. They do $5 million a year in sales. On that $5 million in sales, they lose $2 million. So they spend 7, bring in 5. And the price they want to sell this money-losing restaurant for is $52 million. Would you buy it? No one in this room would buy that. Why would you pay $52 million for something that loses $2 million a year, right? Now, The idea on these growth companies is that, sure, they're losing money now, but that 5 billion is going to become 10 and 20 and 30 and 40. Our expenses aren't going to go up as much. And so 3, 5, 10 years from now, we're going to be making $10 billion a year profit. But you have to go into a lot of assumptions for that. You have to assume the growth is going to continue, the expenses aren't going to go up, all this. That's why it's investing. It's risky. So the reason we see crashes like the tech bubble and this is these valuations get so up there. They're pricing in such perfection. They're going, we're going to grow our sales at 50% a quarter for the next 10 years. We're going to get, and if they do, you should be rewarded for taking that massive risk. But when they price the stock based on assumption that all that's going to come true, like they have to hit these massive, lofty sales profit goals in the next 5 years just to justify today's valuation, eventually people go, the risk is not worth it. The juice is not worth the squeeze. And especially if they slow down. Look at the numbers here. They're doing 900, a billion a quarter, then 1.2, then 1.3, then so they're growing, 20 or so percent like a quarter, 50% year over year. And they'll report earnings one quarter, and instead of growing 50% year over year, they only grew 45. Now you might think, well, they're still growing at 45% a year. It's massive. Why did the stock get absolutely murdered? Because all those previous assumptions about growth and scale must be met to justify today's price. It's all counted in. So if you then change my input data, if they're not going to grow 50% a year, they're going to grow 45 or maybe 40 or 35, well, then the stock is worth nowhere near where we've priced the thing. See what I'm saying? So the Warren Buffetts of the world are value investors. They don't even touch stuff like this. They look at companies that $5 billion is generating, plus $2 billion in profits. And they go in when the thing's been clobbered and they can buy the whole thing for $10 billion. It's a value investment. The earnings will pay it off in 5 years and then you'll make money. This is a growth trade. It's a guess. It's a hope on the future. And there's absolutely nothing wrong with this. I buy tons of this stuff. You have to. But when people say, but they got partnered with NVIDIA, like it's all that's already priced into the stock. You see what I'm saying? So it just becomes riskier. And right now, when you got an NVIDIA and these other companies trading at multi-$100 billion valuations, OpenAI is talking about going public at $500 billion, $1 trillion. Folks, their total sales are $13 billion a year. They're decades from profitability. So it just becomes tough. So, I do look at the fundamental stuff that I can actually articulate and understand. I can see how much the government brings in. I can see taxes. I can see big picture stuff. But I'm not trying to guess on this stuff. I have no idea. I'm not going to spend 80 hours digging through the business of CoreWeave and how it all. I'm not smart to understand. So that's why I just follow market behavior. All right, off my soapbox. What do we got? OSPN. Let's take a look. Hideous. Wouldn't touch it. ASTL. Looking good. Looking really good. Now, what am I seeing here? Because the chart, you might think, Ross, that looks terrible. What are you talking about? Well, what are we seeing forming here near the lows? A nice consolidation, shallowing pattern. This is supply. People thought the stock was massively overpriced. I don't care if they're sitting on the world's largest gold mine. If Buffett and BlackRock and every investor on Wall Street are selling, it's going to go down. I don't care what it's actually worth. I care who's buying it. That's a lot of supply. And until you get through that supply, until all the sellers that want to sell are out of the way, it can't go higher. That's why we look for this. And it looks like it's consolidating, doesn't it? And it's tightening up. So this looks fantastic to me. I would buy this on a breakout about 475. My stop loss would be right in here if I can stomach it. And I'd be looking for a move to $6 or $7 a share. Great pick. But again, I wouldn't buy it today. I would only buy it if and when it can break out above 470, 480. I need to see proof that it's through that supply, that the sellers are exhausted and the buyers are coming in. Any opinions on AR stock? Do I know this one? I don't. Antero Resource. What do they do? Oil and gas. Big nat gas driller. Okay. Yeah, I mean, it's pretty choppy at the moment. It's not really show anything super clear. It looks like it's trying to go higher. Might have been a little too soon, but still just kind of in this no man's land over in here. And the reason for this is just the natural gas prices have been kind of wild. You know, it went from 5 to 3. Good God, it's up at 6. That's wild. It's in a couple of days. I don't know what's going on in that gas, but thank God 3% of my portfolio is natural gas. NGL to natural gas. Is it NLG? What is it? FCG, that's it. Yeah, okay, it's a little more normal. So far, I've lost 66% on FSLY. Mixed reviews. What's your opinion? Well, you're not going to want to hear this. Have you lost 66%? It's not. Oh, you bought away over here. Yeah, I mean, if you're looking for long-term, like fundamental analysis, I'm not going to be any help for you. I'd be wasting my breath, and I'm not qualified to give an opinion. I don't know enough about their business. I'm just looking at price action short term. So to me, it's pretty ugly. If you think in terms of supply and demand, if something's valuable, if it's worth $12 and it goes on sale for $4, shouldn't people be buying the heck out of it? Right. And so if it's still making these big, massive drops, like it's just very volatile. I mean, that's 50% in a week. Immediately starts going down. It's down 30% in a month or two. I just don't know. I don't see anything that would give me any level of confidence one way or the other. Yeah, ASGL does look good. I agree. DXYZ, is that Destiny? Yeah. So this is an interesting one. This is an exchange-traded fund that holds private companies. Their biggest position is in SpaceX, which is really driving this stock. So you can't, SpaceX is private. You can't buy it unless you're, a multi-million dollar private equity investor and you get access to the seed rounds. So that's why it's making these wild moves from 20 to 40 in a couple of weeks, 40 to 25. It's just very choppy. I don't know. I mean, if it would consolidate and show me something, but there's just nothing to interpret from this. PACS. Oops. PAX Group. Little $5 billion hospitality, nursing management. Okay. I don't know if the news was over in here. Something big, obviously, to make it go up 55% in a day. It's a bit extended at the moment. If it were me, I'd like to see it come in here and kind of consolidate in the last place it did and tear up for another run higher. I'm not going to buy it. This is like what I talked about earlier. Is there going to be these like hospitality and nursing management? Is that anywhere on these charts? No. Not that it can't do well, but I just want to put the odds in my favor. Go top to bottom. Do you have a bull market? Yes. Cool. Well, then you want to be buying stocks. Which stocks are doing the best? Metals, mining, energy, right? Okay, good. Those are going to go up. What's the best mining and metals and energy stocks out there? Okay, which ones are showing me that they're absorbing supply and tightening up and getting ready for the law of supply and demand to go to work for me? So if I have a bull market in my back, I'm in the leading group, I'm in the top stocks in that group, I'm in stocks that have all the reasons to go higher, I'm just massively increasing my odds of success. Right? So with hospitality, you got a bull market. Are you in a leading group? Nope. But you probably have it. Do you have a leading stock in that group? I don't think so, but maybe you have, so there's less things working in your favor. Not saying it's a bad stock. It could quadruple from here. Please don't take that as my interpretation. I'm just telling you why I don't own it. Now, Plug Power does look like it wants to go. And if you just cannot buy stocks at their highs, your brain is wired. You have to buy them when they're down. Look for the same pattern, but coming off the lows, right? Same idea. So try to break out here. Looks like it's not quite ready. But yeah, I might take a stab at it here if I could stomach the risk and put a stop at 210. That's about a 12 or so % risk. Look for a move higher. Yeah, this looks right. I mean, it broke out here on this day. Strong breakout, 16%. Close at a high of the day on above average volume. So everything it looks like it should have. This could just be a little short-term squat. Now, So yeah, I mean, plug looks good. Micron, yeah, it's a monster, absolute monster. Yeah, so the semiconductor group has continued to show strength. It's losing favor to the gold and the all this the space and all this stuff right now, but semiconductor stuff still showing some strength. Obviously, Nvidia carried this group. That was the leading group of 2023 and 2024. Micron apparently is coming to its own late. I don't know what's going on with Micron or what they're doing. I do see a very small consolidation kind of over in here. And it kind of, tightened up and came through. A very tight little consolidation in here. So the trend is great. It looks wonderful. If I owned it, I wouldn't sell it. It looks a bit extended to me. It's not my favorite group, but you got increasing volume on moves higher. So it's going higher on volume, on increasing demand in a leading group. So yeah, I think it looks good. No issues with Micron whatsoever. Zeta. Not for me. It looks like a failed breakout. It might come back in. Maybe it was a move too early. But pushed up, pulled all the way back inside the base. Now it's trying again. We'll see. Wouldn't be my favorite. ENGN. Sorry, you asked about this one earlier. Beautiful. Beautiful. Now, this is a small cap biotech. This is as risky as they get. One, it's very small. Institutions can't buy it. Two, biotechs are notoriously volatile. Because what moves biotech stocks? Drug trial results, FDA approvals, things you can't predict. It's not earnings. But man, this is for a small stock like this, because these tend to be more volatile. This is about as clean as you're ever going to find. Really smooth move up from 3 all the way to 9. Think about that. This stock tripled in a couple of months without doing this. It's very smoothly. You didn't get the inevitable selling. Some big piece of news gapped it higher. So it closed one day at 5, opened the next day at 8.5, very volatile. And so you're absorbing that supply. It's tightening up. It's consolidating. And then, that's what I thought. So breaks out here on good volume. It's hard because the volume's skewed. Let me stretch this thing out so you can see it. That one day was so huge, you just threw the whole scale off. But you can see how it's broken out. See how the volume ramped up here on the move higher. This day, really, really good stuff. So it looks really clean. I like this a lot. If I was looking for more volatile, biotech type, I mean, look at the ADR, 8% a day it moves. That's a mover. This is a 14% day. Next day, another 14. It's 30% in 2 days. So, yeah, looks good. Not the type of stock I typically buy, but if I was going to buy them, this is the one. Good. Good pick. Who put that one in? Kim. Good. Or Kimco. I'm not sure which name. Sorry about that. What about Kava on Friday? Yeah, Kava has been a good one. How about a buy? It was an insider pick. We got into it's done very well for us. Do you gamble, poker horses, buy lottery tickets? None of the above. Man, I'm not a big gambler, which is kind of funny considering what I do, but I'm not very good at it. I don't know. I never made any money in a casino. This is the only place I feel like I have an edge is the market. So, I mean, I guess I do gamble in this term, but not the way you're talking about. KITT launching. You guys buying this thing? Let's see. Yeah, it's that big. 30% today. Somebody's trying, something's happening. I don't know what it is. Somebody's buying. But again, look at the dollar volume. Okay, so this is my volume indicator. If you want it, just search Ross Givens volume. It's free. But look here, average dollar volume. Okay, what that does say, how many shares it typically trade a day times how many shares there are. So this thing trades 4 million, 3 million, 5 million shares a day. It's about $1 stock, so you figure $4 or $5 million a day. If a stock only trades $4.5 million in total trading in a whole day, on average, how much money do you think it would take to move this stock in a pretty big way? Not a lot, right? So, I mean, if somebody comes in here and buys $3-4 million worth of stock, it's going to go up 25%. So that's the reason institutions aren't involved. And it's just too small. They can't get enough enough money in it. But it's also more easily to manipulate, right? You take like one of the stocks we were looking at earlier, like OSPN, right? OneSpan is a little stock as well, 4.5 million. You compare that to like ConocoPhillips, for example. It trades $790 million a day. So 20 times as much. No, 200 times as much. So it's not as easy to, that's why you don't see the wild swings. FCX. Yeah, let's look at the miners. FCX is beautiful. Clean trend higher. And there's a lot of strength when it runs. And instead of consolidating for a few weeks or months, it consolidates for like a week and a half, and starts going higher. So a lot of strength here in Freeport. They're one of the biggest copper miners out there, really reinforcing my copper thesis at the time. Let's look at some of the other mining and metal stocks here. Carpenter looks really good. Okay. Now, this is a mining stock, specialty metals, alloys, etc. So not just a copper miner or a gold or silver, but you're seeing that consolidation up here at the highs, right? And it went from 220 to 320 and kind of comes in, sort of tightening up. So it looks like it's getting ready to run. Now, it's not a fast mover as some of the others. It's also a $340 stock. So some people don't like higher price stocks, but it looks really good. FCX, we just touched on. Alcoa, big aluminum company. Really good. Nice and strong. Not always going to be shallowing breakouts, but you get this flat consolidation, run up, kind of consolidating, probably getting its rest for another run higher. Newmont, big gold miner. I think we're a little late to the party on this one, but you can see how perfect that pattern was. Clean breakout there at 100, straight to 130 in about a month. MP, no, it's just all over the place. One of those rare earth plays. I like the space, just don't like the stock. ATI, again, very similar kind of breakout here in the December timeframe. Royal Gold looking extended. I mean, a lot of these look extended because gold just made new all-time highs. So it's why I'm kind of looking at some of the other metals, right? Steel and what's about Metcalf coal, METC? No. HCC, they got absorbed. Okay. Yeah. Shallowing here. Trying to look for something that looks really viable right now. Oh, that's the one we did in Peabody. You can see why. Cleveland Cliffs. This is, a little shaky, but looks decent. We see some signs that it's absorbed some of the supply after the last run up. Kind of coming in, this little shakeout move came right back. So Cleveland Cliffs actually looks really good. Big steel mining company, right near the breakout point. Don't need to risk a lot of money. I'd probably put a stop loss, below this swing low, risk about 7% on Cleveland Cliffs. This is probably a decent buy in here. Mataranch, I talked about it. This one broke out, and then looks like some kind of news came out. It shocked it down lower. This shows quality issue related charges. So, that sucks, right? It's a clean breakout, came out nicely. We talked about this in one of the videos. One of our sessions a week or two ago. Beautifully comes out, and then SEC charges. Like, you can't predict that kind of stuff. That's the single stock risk you're just going to have to face in the market. But it's trying to hold up in here. We'll see if it can get through it. Compass Minerals looks pretty good. Breaking out to new highs after a multi-month consolidation like that. SXC, no. Worthington Steel looks great. Big flat, so kind of base on base and running higher. Metallus, Zeus, beautiful run here in Olympus Steel. Wheaton Precious Metals, big silver miner. Obviously, that one's having a party, but same idea. Comes in here, kind of tightens up and shallows and breaks out. And you'll notice that what was resistance, the level the stock couldn't get above, suddenly becomes support, where the stock can't get below. So I love these breakout levels, these right in here, because I'll buy it if it breaks through. If it runs in dips, I'll buy it on the pullback there. My favorite place to buy a stock is on that breakout level, either the first time or when it's retesting it. All right. Way over time. Let's see if any other questions. Have you sold any HL, Hecla Mining? I don't know if we've sold any of this yet. I have to go back and check. I don't think I bought this one on my account for some reason. I think I was doing something, but yeah, it looks great. We've had a really nice, I think we bought here on this breakout. It's done beautifully. I mean, it's about, yeah, if you're up double on this thing, I'll definitely sell a good chunk of this thing here. Okay, how do you think silver will run? I think you got 200 to 250 in silver. Is it going to happen this month? No. Is it happen this year? Maybe, but I'm doubtful. I just think it's getting extended. It's possible. I didn't think you go to 100 this fast, but my long-term target is about 200, 250 on silver. What about TAN, a solar ETF? Yeah, it looks actually really, really good here. When you have the whole ETF breaking out, that's usually a great time to find some of the stocks. This is the solar ETF. See the nice clean breakout structure here? So then what I would do is go find my solar stock list. And I've done videos on how to find these, but just Google the ETF, look at their holdings, and then run through and look at First Solar, not my pick. Enphase, little wobbly. JKS, little wobbly. NXT, this is a clean breakout here. Looks good. Sunrun, this would probably want to look at. See the big, consolidated for a couple of months. Solar Edge, no. Boom. Array Technology, this is the one I'd probably pick. It's just trading a little bit cleaner, right? Big consolidation right into here, trying to break out higher. Inlight, beautiful. Shoals, you can see the move there. Canadian Solar's weakening. Anyway, that's kind of how I'd go about it. Why would you not touch OSPN, newer guys I could break out? Okay, let's take another look. Sorry, some of you guys have been mentioning this one a lot. I don't know if there's something going on with this stock. This is not one I like just because it doesn't show me any signs it's about to go higher. So I've been talking about this consolidation pattern, right? I like to see we've absorbed the supply. Now, they don't always follow this exact pattern. Please don't take this as the Bible. It's just the setup I prefer the most. Because once it does that, I know when it gets through here, I got a pretty good chance of a fast move higher, okay? Now, when I look at OneSpan, does it look like the stock is in demand? Well, not really, because it's going lower. The stock fell from 16 to 11. Imagine you're looking at a house that's listed for $300,000. You really like it, your wife likes it, but it's more than you want to spend. And then one day, they mark it down to $200,000. You're going to go buy that house, right? So if a stock is from 16 to 10, 11, if it's in demand, if it's really worth more, people are going to instantly buy it up, and that's not happening. So even at a 40% discount, it's had 3 months. Nobody wants the thing. When they do want it, it will do kind of like it was trying to do here. So it was tightening up. Okay, you're absorbing the sellers. Let's see if we can round it out and break out higher. But instead, it went lower, low. Okay, back up. Nope, took out all those lows and going lower. And when it bounces, it's not bouncing back. And the biggest tell is, again, if I right-click and go to invert scale, flip this chart over. Well, now it looks like a pretty decent stock. I was kind of shallowing out here and pushing higher. So we always tell people, or I always tell people, you want to buy tennis balls and you want to sell eggs. All right? And think about it like this. If a stock takes a big dip, right? It's way on sale, and nobody buys it. It splats like an egg. There's no demand. If they don't want it, I don't want it. On the other hand, if a stock makes a big dip because SEC investigates, like the one we looked at, or something unexpected, and it bounces right back, it acts like a tennis ball. That means there's lots and lots of demand. As soon as it got cheap, you bought. What you have is an egg in OneSpan. Today, I'm not saying it's not going to be worth a ton more in 6 months or 6 years or whatever. But right now, look at the charts. There's just no demand for this stock. It absolutely could go higher, okay? do not think what I'm saying is this is a garbage stock's going to go lower, but I don't see any signs that make me see that there's big demand, that there's big buying for this stock at the moment. And so you compare that with something like a silver that, has this day in here where it falls 9%, immediately gets bought back, right? Any dips are bought. That's why stocks trend well. Any little dip, people buy it and buy it and buy it. That's what makes trends go higher. When it goes like this, it's just bouncing around on intraday news. There's no big reason, no big demand for that stock. Okay? All right, guys, we are way over time. I'm going to go ahead and end it now. If you haven't already, if you're watching this on YouTube or X, please go to tradewithross.com. Get signed up. It's just $5 for an entire year. You get an entire year of these live weekly mentoring sessions with me. Every Monday, you're going to get a live weekly session with my analyst, John. Every Thursday, you're going to get access to these industry strength indicators. You can keep abreast of where the money's flowing in the market, where you want to focus, see when those tides shift before everyone else. You'll get my weekly newsletter, tons of other stuff. And again, it's just $5. Seriously, $5, whole year, no strings, no hidden charges. So get signed up for that. But otherwise, guys, thank you for being here. Appreciate it. I am going to go talk to my analysts to get some new picks out here for the members, but we appreciate y'all being here with us. Hope you learned a lot, and please come back next week. If it is over your head, I'll make it simple for you. I promise you can do this. So thanks, guys. Good talking with you. You guys have a great rest of your week, and I'll see you in next week's live session.